think you need $80,000, $100,000, or even more saved up before you can buy your first home. If that's what's keeping you on the sidelines, you might be making a decision based on one of the biggest myths in real estate. Every year, thousands of Americans continue renting because they believe they're nowhere close to having enough money for a down payment. Meanwhile, many first-time buyers purchase homes with far less cash than most people expect. The truth is, misinformation about down payments has become so common that it's preventing people from even exploring their options. And that can cost you years of building equity while rent prices continue to rise. In today's video, we're breaking down 5 of the biggest down payment myths that keep first-time home buyers renting, and by the end, you'll know which myths to ignore, what lenders actually look for, and how to determine whether buying a home is more realistic than you thought. But first, let's start with the biggest myth of them all. Buying your first home can feel overwhelming. Between social media advice, family opinions, and outdated financial rules, it's hard to know what's actually true. That's why this video focuses on facts, not assumptions, whether you're hoping to buy next year or simply planning ahead. Understanding these myths could save you thousands of dollars and help you make smarter financial decisions. Let's begin with the misconception that scares away more buyers than any other. This is probably the most widespread myth in real estate. Ask 10 people how much money you need for a down payment, and chances are several of them will confidently say 20%. While putting 20% down can have advantages, it's not a requirement for most first-time home buyers. In reality, many loan programs allow qualified buyers to purchase a home with much smaller down payments. Depending on the type of mortgage and your financial situation. Some buyers qualify with as little as 3%, 3.5%, or even zero down through certain eligible programs. So where did the 20% rule come from? Years ago, lenders viewed a 20% down payment as a benchmark because it reduced their risk. It also allows many buyers to avoid paying private mortgage insurance, often called PMI. But avoiding PMI and qualifying for a mortgage are two different things. Many buyers choose to purchase a home sooner with a smaller down payment instead of waiting years to save 20%. Let's look at a simple example. Imagine you're buying a $350,000 home. A 20% down payment would mean saving $70,000. For many first-time buyers, that could take several years. But if you qualified for a loan requiring only 3% down, you'd need $10,500 instead. That's still a significant amount, but it's dramatically less than $70,000 and potentially much more achievable. Of course, putting less money down usually means borrowing more, which can increase your monthly payment and may require mortgage insurance until you've built enough equity. That's why the goal isn't to find the smallest possible down payment. The goal is to choose the option that fits your financial situation while keeping your monthly payments affordable. The biggest mistake isn't buying with less than 20% down. It's assuming home ownership is impossible without first saving tens of thousands of dollars. And that brings us to another misconception that surprises even more first-time buyers. Here's a real-world example. Imagine Sarah has worked hard and saved $18,000. She plans to buy a home using a low down payment loan that requires only 3% down. She believes she's completely ready because she's finally reached her savings goal. But after her offer is accepted, she learns she'll also need money for closing costs, the inspection, and prepaid taxes and insurance. Suddenly, her budget is much tighter than she expected. Instead of moving in comfortably, she's worried about every unexpected expense that comes with owning a home. The lesson isn't that buying is impossible, it's that a smart home buyer prepares for the entire transaction, not just the down payment. One of the best financial habits is to keep a separate emergency fund instead of putting every dollar you've saved toward the purchase. Owning a home comes with surprises: a broken water heater, a leaking roof, or an HVAC repair can happen when you least expect it. Having a financial cushion can make the difference between enjoying your new home and immediately feeling overwhelmed. But here's something even more surprising. Some people have enough money saved, good income, and steady employment, yet they still believe they can't qualify for a mortgage. Why? Because of another myth that refuses to disappear. Many first-time buyers assume they'll have to pay every dollar out of pocket, but they never take the time to see what assistance may actually be available. Depending on where you live and your financial situation, there may be programs designed to help qualified buyers with things like down payment assistance, closing cost assistance, grants, low down payment loan options, educational programs for first-time home buyers. Not everyone qualifies, and every program has its own requirements. But the biggest mistake is assuming you won't qualify without checking. Here's a quick example. Carlos and Mia spent 2 years trying to save enough for a home. They believed they needed thousands more before they could even begin the buying process. After speaking with a local mortgage professional, they learned they qualified for a first-time home buyer assistance program that reduced the amount they needed up front. The program didn't make the home free, and it wasn't the right fit for everyone, but it helped them move forward much sooner than they expected. The lesson? Don't assume your only option is saving for years without exploring the resources available to you. A short conversation with a qualified lender or housing counselor could reveal opportunities you didn't know existed. Instead of worrying about myths, focus on the steps you can actually control. Start by reviewing your monthly budget and understanding how much home you can comfortably afford, not just what you might qualify to borrow. Check your credit reports regularly and work on building a history of consistent on-time payments. Save not only for your down payment, but also for closing costs and an emergency fund, so you're financially prepared after you move in. Finally, get pre-approved before you begin seriously shopping for homes. A pre-approval gives you a clearer picture of your budget and shows sellers you're a serious buyer. Taking these practical steps won't guarantee you'll buy a home tomorrow, but they'll put you in a much stronger position whenever you're ready. Let's quickly recap what we've learned. If you've been putting off buying your first home because of something you've heard from friends, family, or social media, hopefully you now have a clearer picture of what's fact and what's fiction. Buying a home is one of the biggest financial decisions you ever make, And decisions like that should be based on reliable information, not outdated myths.